discussion and panel about some things new in mining and mining investment, especially in Australia. For the last 3 to 4 years, a weak Aussie dollar has delivered very strong revenues to Australian producers. I don't know if this is really stuck in the minds of investors, but it certainly has given a leg up to the iron ore industry and more recently the precious metals companies. Producers enjoyed hefty margins as revenues have been in US dollars, and they've enjoyed a boom in rising gold prices and this soft dollar, which has also kept costs here under control, a marvellous set of circumstances. This bounteous gift has trickled down to the exploration sector and not just in gold. Exploration has continued. In Victoria, exploration has boomed. And what do you know? The more we've explored, the more we've found. Recent discoveries include De Grey Mining's Hemi gold discovery in the Pilbara, Alkane gold and copper in the Lachlan Fold in New South Wales, Staveley with the Cayley copper discovery in Victoria's west, and even Rio Tinto's Wino copper discovery in the Patterson. These discoveries are changing the focus and direction of exploration and discovery in Australia. I want to go straight to my panel because each of these industry leaders are playing a role in the rejuvenation or the continued strength of the Aussie sector. We'll hear from each of my guests and then we'll have some general discussion. So first off, let's go to Richard Laufmann, CEO of Rex Minerals and best known for the Hillside Copper discovery and project in South Australia, but actually better known more recently for the Hog Ranch gold project in Nevada. Richard, welcome. You've known this project Hog Ranch a long time. Can you tell us why you think Hog Ranch's time has come? And what are the big drivers behind the economics of developing a lowish grade heap leach operation in Nevada?
Thanks very much, Richard. First time on a forum like this, so this is interesting. Yeah, Hog Ranch. Look, we made a big discovery a while back in South Australia, copper. And a bit like a duck swimming around in a pool. Doesn't seem to be much happening on the surface, but the legs are going fast under the water. So copper, it's a great space to be. But we also pivoted to this gold asset in Nevada because Western Mining owned it in the late 80s and early 90s. And I was with Western. And Western Mining bailed on that project and other North American projects when gold was around $300 to tops $400 US an ounce. Fast forward to today, and we're over $1,700 an ounce US. So there's a big difference. So there's already a lot of gold. So we got it as a moose pasture, but having worked with the guys that used to run it, in fact, I brought that team to Australia to build a big heap leach for Western Mining and Ives in early 2000. And that was a fantastic introduction to heap leaching for me. A boy from outback Western Australia, punting around in the gold fields, all of a sudden had to learn about heap leaching. So, you know, gold's where it's at today, that's for sure, right? Everyone knows that gold's hot, and I think it's got a long way to run. But the heap leach project in Nevada, well, in 8 months, we've been able to take it from 0 to 1.4 million ounces. So that's less than $1 an ounce discovery cost. It's growing very quickly. There's a lot of information that Western Mining left behind that we've been able to assimilate to give us a big head start in understanding the system in the area. It's kind of fantastic.
Well, it's a great mining jurisdiction too, Richard, isn't it, over there in Nevada? I mean, how do you find operating over there, and is it easy to get the technical support you need?
Mate, we've all been around the world, and where do you want to be in a time like this? You want to be in Australia, you want to be in Canada, or parts of it, and you want to be in parts of the US. And Nevada is right up there next to Western Australia as two of the places to be. They've got a big mining fraternity. They know what they're doing. They've got a lot of mines. It's not unusual, and it lends itself to it. Most importantly, it's pregnant with opportunity. So it is a great place to be for sure.
And your scoping study there, that's the release to the stock exchange earlier this month. That seemed to throw us some interesting numbers there. How are you feeling about that?
Made it $1,700 gold price, and we didn't price it at that, but nonetheless, this thing's got a payback of 1.5 years, so it makes money. Look, it's heap leaching, and for a lot of listeners, they're used to Australian gold. if you're going to build a process plant out in the middle of nowhere in Australia, gold, less than 3 million tonne, you're going to look at about $30, $20 to $30 a tonne to process ore. In a heap leach project in Nevada, instead of crushing it up to talc size, we're only taking it to golf ball size. So we don't spend a lot of energy. We don't have to build a big process plant, and we just leach the gold out. That's costing us less than $6 a tonne of ore to process. It's a big difference in metrics, right? And that's played into our hands at this project. So what that means is at the end of the day, you don't have to go looking for the small veins, and you don't have to follow everything. You take the whole lot out. You don't have a big strip ratio, and you put it all on the heap. It's kind of a really effective methodology, pioneered in Nevada and made very cost effective. So look, the whole lot's looking pretty good in a very short period of time. Thanks.
That's very good, mate. Thanks for that. And in South Australia, copper price is just inching up every day. How's that one looking for you?
Well, I got 20-something kids, and I tell all my kids, if you want to put something in the bottom drawer for your retirement, which is going to be harder than my retirement, I'd put gold and copper in the bottom drawer and start accumulating.
Oh, that's great, Richard. Look, thank you very much for that. And now, if I may, I'd like to move on and bring in Cathy Moises. Cathy is probably best known as one of the leading small cap resource analysts in Melbourne, but now you've jumped the fence and taking on non-exec board roles at Arafura, at WA Carlin, and an advisory panel at Argonaut Resources Funds. Can you tell us a little bit about Argonaut, Cathy, and how much you manage, and what are you seeing, and what's getting your attention at the moment?
Okay, well, Argonaut Resources Fund is headed by David Franklin, who's got a very good pedigree. At the moment, it's very much a startup, and we're looking to get some runs on the board. And I must say, his early performance is excellent. So watch this space. We're very much sort of looking at sort of new developments. I mean, gold clearly, as Richard's already highlighted, is in these times of uncertainty in particular, a really good investment. And beyond that, I think the new battery metals is where we really would like to focus. This is not just talking about my Argonaut hat, but also my other hats as well. And so look for something with a good balance sheet, a product which is definitely in demand at the moment, which would be gold, copper, all the battery metals, and I think you've got a very good foundation.
Oh, that's it's very much how we're seeing it down here as well, Cathy. This is a wonderful time for small resources. The last time the Fed injected so much money into the global economy after the GST, the ASX Small Resources Index went up 300% over the next 2 years. So it's a wonderful time. You've seen a few cycles and a few different projects coming through. How are you feeling about the current mood in the market and investor sentiment?
Oh, look, at the moment, there's a real window, Richard, that investor sentiment seems very, very high. And certainly the capital raisings at the moment are very well received. And it seems like the window, I mean, Arafura, which I'm on the board of, I mean, we've just had a very successful raising. And I think across the board, if you look at the amount of raisings, it's almost unprecedented. The question is, how long is this window going to stay open for, with COVID continuing on in the background? But I think sort of I've been in the industry nearly 35 years, and we've seen a lot of cycles, and gold, I think, is always a good store, but at 1,700, is it going to go up or down? Probably more up in the short term, maybe track down to more reasonable levels when the whole world gets more stable. But it's always a matter of picking those things which you think have got growth. I think the whole management in the sector has improved markedly over my stint in the industry, and there's a lot more focus on returns in investment rather than growth for growth's sake, which we really saw probably over the 80s and 90s, that a lot of people just bought assets to get larger, which has proven to be a very poor strategy in the majority of cases.
And there was talk of Strandline receiving some help from the Northern Australian Investment Fund there, and federal loans, and some talk that Arafura might be getting some support there as well. I don't want you to comment on anything that no one wants to know, but I mean, there just seems to be that more supportive government atmosphere out there for companies with good projects.
Look, I think it was a terrific outcome for Luke and his team at Strandline. I mean, they've done a fantastic job. I've been to their asset in Tanzania, and a really good amount of money into the kitty for Coburn. I think Arafura is very well positioned, given the government's supported Strandline, in that we're in the Northern Territory. It's an area of support. Arafura is likely to maybe become a hub if they do go ahead with development at some stage. So I'd say, speaking for myself, and I presume the rest of the team at Arafura, we're very hopeful.
And you see, is it mainly being driven by the dynamics of encouraging new supply in that rare earth type area?
Look, Richard, I mean, the main driver for the rare earths is the battery, the EV car market, and all the industry experts, such as Roskill, have indicated that there should be growth per annum of between 7 and 10%. So that really sort of equates to a really hot market over the medium to longer term. Most of these projects, if you go through to final product, have got a development cost north of $1 billion. So there's a pretty major impediment to start up. And there's usually a very long lead time, not only in the development, but also, I mean, look to Linus, the amount of time it takes to get this chemistry set correct. So I think, unlike, say, lithium, where we're seeing in the short term there's been a little bit of oversupply, in the rare earths, just the impediments to start up, I think, position that sector a lot more favourably. On top of that, we're seeing a flight out of China, and there's a push to have some supply outside China, and that's outside Linus quite problematic at the moment.
Yeah. Look, thanks, Cathy. We'll hear more from you after our next speakers. But anyone who's got a question for Cathy or my other speakers here today, please type them in there. And, you don't get access to experts like this very often, so please take advantage of it. And now for a completely different perspective from our next speaker. Oliver Kleinhempel is the non-exec director of Speciality Metals and MD of Cronimet Asia. Cronimet have come on board Speciality to restart the Mount Carbine tungsten mine in Queensland. And Ollie has just spent a few months in Australia, thanks to the lockdown, overseeing the refurb of Mount Carbine. Ollie, welcome to the show, and welcoming Cronimet to Australia. You appear to have spent a bit more time here than you originally planned.
Yeah, thanks, Richard. Hey, and hello to everybody. Now back from Germany. Indeed, I spent the last three months down in Australia with a team on the ground, which was a good experience, and happy to see things progressing despite a challenging time.
No, certainly is, and thank you for your early start here to talk to our viewers and listeners here today. Let's talk tungsten. Why is anyone interested in this metal at the moment, and what are the major uses in this modern age?
Yeah, thanks, Richard. Well, we as Cronimet Group, we are engaged in the tungsten market for a long time, and we've seen a lack of upstream developments on the primary side. There's approximately 30% of tungsten emerging from global recycling facilities. But definitely the Western world has lacked on coming up with new projects. 85% of tungsten is coming out of China. Strong supply over the recent years. That obviously depressed prices a little bit. But now I would say tungsten is one of these hidden champions that is almost irreplaceable in its applications. And I would say that consumption is not as price sensitive as you might see it from other steel alloyed materials, as vanadium and niobium, for example, is replacing each other depending on price sentiments and demand, let's say, in the market. On tungsten, we believe that incentive pricing is around $300 APT, which is 30% above today's traded prices. So I think there is a bit to come to attract new investments. But the beauty down at Mount Carbine is that it's a historical mine site with well-established infrastructure. So we are definitely at the forefront there on developing a new large-scale production in the Western world. Yeah.
Yeah. China dominates the supply of APT and the finished product. Are there any concerns about the concentration of supply that's perhaps giving, a bit more support for your efforts there and enthusiasm for what you're doing in Australia?
Well, I would definitely confirm that tungsten is one of these commodities which is on the geopolitical agenda. It's listed with most of the industrial economies, the Europeans, the US, the South Korean sectors, the Japanese. They're all depending on tungsten supply for their manufacturing industries. So it's definitely up there. The question is, what can the consumer side do in order to encourage investment into the upstream developments? In Australia, there's a lot of communication between the government, the chambers, etc., and the private sector. So I think that's very helpful. The government has set up the Critical Minerals Facilitation Office. You see the research sector being extremely active to identify ways to basically recover resources, not only new exploration, let's say, developments, but also looking at historical mine size as we have it in Mount Carbine. And I think that's a fantastic ground. As I said before, there is a certain incentive price that I think the industry must see in order really to have projects materializing.
No, that's coming across. So Queensland's an interesting place to operate. I mean, your first time in Australia, how have you found it there? Level of skills, government, state and local cooperation, how's that playing out for you?
Well, I would say so far very positive. As I said, I mean, we are fortunate to be located just 2 hours northwest of Cairns. A great drive-in infrastructure, all the supporting facilities surrounding the site, and workforce. All our workers are from the area, which is very helpful. A very strong commitment by the team, and obviously also saving us a lot of costs up there. The exchange with the government and our partners, and specifically the research sector to be highlighted there, obviously is a bit disrupted with the COVID restrictions. But I guess once we are coming out of this, the government is likewise showing a great interest in obviously getting the economy up again, and yeah, we are very much looking forward for the next months to come.
Thanks, Ollie. Well, don't go away, because I might have another question about some of that ore sorting technology you're using there. But I'd like to move on for my final guest here, Cameron Bain. He's a great old friend of the Melbourne Mining Club, and he's the principal of Mincore Engineers based in Melbourne, and one of the new breed of innovative and energetic engineering groups servicing the global mining industry. And it is global, although I imagine it's hard to get around at the moment, Cam. But Cam, how interested are the new breed of mining chiefs in new ideas and new solutions to their problem? And is that what you're really, pitching yourself towards?
Yep. Hi, Richard. Look, thanks very much for the opportunity to participate here. Look, traditionally, companies were very focused on economics, broad economics of projects, and proven flow sheets and infrastructure. There was, because they had known costs and known schedules, so outcomes could be guaranteed. What we're finding now is more interest in low impact on community and the environment. So, strategies are changing to more zero waste, more, newer technology to process more ore and less waste, so hence ore sorting, but also water conservation, looking at, improved efficiencies in your flow sheet. So you're either recovering the water that you're using, or really looking at a macro level as to, well, what densities, what water balance do you ultimately need to get, the end product out of the ore. So, the culture is changing, and I think when you see some of the issues around the world with some of the big iron ore dams, there's definitely an appetite for varying the flow sheet now for a lower overall life of mine cost and less risk on the communities and the environment.
It's interesting, water, it's a big issue, isn't it? Are you seeing anyone sort of, getting more involved with things like dry stack tailings and things like that as a way of optimizing their water use and also, solving the tailings issue?
Definitely. The technology's come a long way in that space. You'll see all the big major players, the Metsos, McLenahans, they're all in that space now. Technology's getting bigger because that was always one of the limitations, was scale up of smaller modular plants to the size that's needed for big throughput operations. We've done a number of studies, and we're actually installing a dry tail stacking system for a 1 million tonne per annum plant in Africa. And the cost when you look at life of mine is probably cheaper dry tail stack, plus you're using a lot less water. That's certainly an area that we are honing in on.
Yeah, and speaking of honing in, where's some hotspots of demand that you're seeing at the moment, both in terms of geographically and, where is the interest coming from? Is it precious metals, base metals? Where are you seeing the greatest amount of inquiry at the moment?
Look, where the market's moved very quickly at the smaller end. We're finding the less than 100,000 ounce sort of gold deposits that never traditionally had a lot of capital to do stuff, or the economics weren't there to retreat low grade dumps, or the tail grade was always not high enough to warrant further processing. So we're working on a number of operations sort of up to that 100,000 ounce per annum mark, where the appetite and the economics are there to put in a regrind mill, look at debottlenecking the plant to improve the throughput through circuits. Pre-concentration using ore sorting, you mentioned earlier, is really starting to show its value in the flow sheet in terms of getting more high grade ore through an established circuit, because it takes time to implement the project. So we're finding a lot of old low grade dumps. People are de-dusting the old studies that were done in the 80s and 90s to say, well, okay, it's $1,700 an ounce. It's quite, look at your pit shells and things, it's quite easy to look at the economics now on what those projects can deliver.
Well, mate, thank you very much. Don't go away. I've got a question that's there for Ollie, but before I do that, I think what you just said, your last comments were very appropriate to Richard. What do you think about all that, Richard? You're heading down the tailings treatment pathway, and are you going to be building up your cash flow with a view to perhaps extending the life and maybe the depth of your project at Hog Ranch, mate?
Yeah, for sure, Richard. I mean, it's a whole new world, isn't it? So old days, late 80s and 90s sounds like yesterday, but it was so long ago. And we were all trying to scrounge around and mine at $300 and $400 gold prices. At $1,700, the world has changed dramatically. It doesn't have to be 1,700, by the way. The world started changing back at 1,300 and 1,400. But now it's just, gloves are off. Yes, definitely got to have a look.
Yeah, it's interesting in the stockbroking side of things and the valuations. People are only just starting to plug these new higher numbers in to their models and spitting out some. And they're also, with the lower interest rates, they're also dropping their discount rates, and starting to throw off some very interesting numbers. And you're seeing some quite decent share price movements in these stocks that at one stage you thought were pretty fully priced. But gold, it's the place to be unless you're in tungsten. Here's a cheeky question for you, Ollie, from the audience, not from me. I'm not this cheeky. Mate, are you looking at any other tungsten deposits in Australia for expansion? That's a cheeky question, isn't it? But I'll throw it at you anyway.
Well, nothing has been released to the market. So from that point of view, I don't think we are in a position to confirm anything. But look, the way we approach this is that we are looking for corporations. I mentioned that earlier. We have a strong emphasis on exchanging with the research sector, specifically the University of Queensland Sustainable Minerals Institute is a fantastic setup. I think there's a lot to learn from each other, and likewise between the market participants. So we are definitely in exchange with tungsten developers, not only within Australia but globally. We had similar projects under the Cronimet umbrella developed in Europe, in Central Africa. So there's an expertise that we have developed over years, which we are bringing here into Australia through the partnership with Speciality Metals. And as I said, I mean, Australia is blessed with resources. We all know that. I think it's a hidden champion. There's geopolitical demand, or let's say emphasis from global governments. And I think the Australian government is doing the right way, setting up, again, facilitation offices, facilitating discussions within the resource community, and we want to be part of it. So we are very open to exchange with anybody, and kind of collaboratively bring the sector further and make sure that tungsten is back on the export list, which it hasn't been for a very, very long time.
Thank you. Thanks for that, Cathy. I was just wondering, you've seen a lot of sort of movements in the market over the years. Where are you seeing, or where do you think that the future is most attractive in this mining sectors, particularly for the mid caps and the small caps? Where anything grab your attention at the moment?
Well, look, I think if we've looked over the gold sector or the diversifieds over the years, and we had Normandy in the 80s and early 90s, which really dominated, and then we had Northern Star come in and Evolution, and they've dominated probably the last decade or so. The one I'm really focused on within the gold sector is Capricorn, because it's the old Regis team, and I think they're very well equipped to deliver low cost. And I think at the moment, with the ability to hedge, if they do buy someone else's project, because they had relatively under hedged for Karlawinda, they're in a great position with their current share price to grow that company. So I think that's the one I'd really be focusing in on. And then looking beyond that, as I've highlighted before, I think the reason why I accepted the Arafura board position was I'm a big fan of the rare earths, and to highlight obviously Arafura because I'm on the board, but Lynas is the industry leader there, and also Peak Resources, which is a little fledgling Tanzanian rare earth producer. I think they're all really interesting, sort of definitely for the medium term, because we've really got to see that demand for the EV vehicles to kick in to drive those sort of stocks.
Are you surprised by the relative success and sort of almost exploration success boom, if you like, that you've seen across Australia just in the last sort of 6 to 12 months?
It never fails to surprise me, Richard. You think that all the easy discoveries have been made, and it suddenly turns around and there's another whole raft of them. So I think it's just new technology, new ideas, new capital. It just keeps on delivering, which is a fantastic result.
And Cam, are you seeing your customers more concerned about still chasing that optimization, or are they more about sort of jamming more rock through their mills and getting it that way?
Look, what we're finding, because time is a big player in a lot of the customers that approach us, are very time-based as well. They don't want solutions that take 2 years to install. So quite often it's a combination of having a look at the data, looking at the flow sheet, finding out where the bottlenecks are, and understanding the ore and say, yeah, we can go for a coarser grind size and put more ore through it. Or we're doing a lot of work on pre-concentration. It may well be, rejecting the lower grade material, putting on a stockpile and putting high grade through. I think, as Cathy mentioned, the technology's there to really tailor and that's one of the problems with the mining industry. There's no one plant flow sheet ore that's always the same. Yes. So you've got to continually learning about the ore, the technology, and really tailor the solutions to what the client needs. And it can be economics, or it can be waste management, zero waste management, tails dams, community-based projects. We're doing a fruit project in near the DRC at the moment. So you're really tailoring your solutions to suit your customers, so they, you can build those relationships.
Oh, that's great, Cam. Well, listen, we could go on like this for a long time, but we need to put a line through it. And I really want to thank my guests today, Richard Laufmann, Cam Bain, Cathy Moises, and Oliver Kleinhempel, all the way from Germany, mate. Thank you so much for pitching in today and helping out and making this such a valuable chat room. And thank you also to the Mines and Money people for putting on this marvellous 3-day event. And don't forget to hang on in here, because they have live mining showcases later on this afternoon, and you can log into those and explore a few more projects. And that's open until 4 p.m. today.